2 years ago, I mean, everyone was talking about stablecoins, but you did not necessarily have the wind at your back the way you do now, at least here in the U.S. with an administration that seems supportive.
Yeah, look, I've been telling people, there have been much worse times to be in the space.
Yeah.
So, having lived through pretty much all of them, it's really been, just a great run for the last, 6-8 months now since the election.
So just for folks who aren't familiar with Yellow Card, the legend goes, and correct me if I'm wrong, you were a student at Auburn University. You basically witnessed somebody trying to sort of transfer money, and you saw how much money they had to pay in order to transfer that money, and you kind of thought to yourself, shouldn't there be an easy way to do this, or a cheaper way?
Yeah, 100%, right?
Yeah.
And and there is now, right? So at the time, that was back in 2017, right? So at the time, it was Bitcoin, and hey, Bitcoin, it's free, it's instant, it's fun, all this great stuff. And the more that we started thinking about it, it's what would this guy's mom do with $200 in Bitcoin?
Yeah.
Right? You can send it around the world, but then how are you actually going to transact with it?
Yeah.
Right? And so now with stablecoins, there's just a new way of actually being able to interact with the dollar, the world's global reserve currency that we're all using on a daily basis.
It's interesting too, because we mentioned that, of course, you're the largest one in Africa, licensed one in Africa right now. And we've seen, particularly in the FinTech space, we've seen a lot of the countries in Africa, particularly in the sub-Saharan countries, really sort of embrace FinTech in a way that here in the US, we were maybe a little bit late, relatively speaking. Was the need there because of the transaction costs? Was it because of transparency? What was the real need?
Yeah, I think when you look broadly across the continent, you're talking about, essentially, what was a blank slate, right, before FinTech.
Yeah.
You didn't have as much of, incumbent infrastructure as you did in, the US and Europe and other parts of the world. And so, FinTech was able to really take the continent by storm. And now that's transferring over to crypto, right, and to stablecoins specifically. A lot of the, traditional rails, especially for U.S. dollars, just don't work, right?
Yeah.
Look, the intermediary bank system and SWIFT and these systems were not set up for emerging markets.
Yeah.
They were set up for the U.S., right? They're not a benefit to anybody else in the world. And so, now you have this technology with stablecoins that's just fundamentally changing the way that people interact with the dollar.
Yeah.
It's changing the way that businesses around the world interact with the dollar, and it enables them to be able to move that money outside of the intermediary system, right, without having to ask New York for permission to move that money.
So what happens as we get more players into this space? For the last few years, it's basically been Tether and a couple other companies, at least here in the U.S. side, that have kind of dominated. But when you start hearing traditional banks talking about doing this, we were just interviewing the CEO of Western Union, they're moving into stable coins. Is that a net positive for you, or are you worried about the competition?
No, look, we're working with a lot of these banks and companies to, help power that, right?
Okay.
That's what we do, is provide that underlying infrastructure. And I think, the reality is, especially now with Genius, you are going to see a lot of people moving into the space, especially on the issuance side. And you're already seeing that with banks, right? You have a lot of the large, JP Morgan and BOA and Citi and all these others that have announced some semblance of a plan to issue stablecoins.
How do you sort of deal, though, with the criticism, and I'm talking more so the criticism by governments that are concerned that this could be just ripe for fraud. It would potentially, for some of these countries, maybe undermine their own currency systems in a way. What's your response to that?
Yeah, so I think from a fraud standpoint, the blockchain is much safer than the traditional banking system, right? If I send you $1,000 right now to your bank account, it's a black box. I don't know what you're doing with that money from there. I don't know where you're sending it. With blockchain, I can see every wallet you've ever interacted with. If you're 2 hops away from a North Korean wallet, I can see that on chain.
Okay.
And so it's just a much different level of transparency. And then, specifically when it comes to, this idea of undermining local currencies and local economies, that's just not something that we're seeing in practice, right? What this technology is doing and what stablecoins are doing is, like I mentioned, it's fundamentally changing the way that people interact with the dollar and shifting the way that they already interacted with the dollar to make it more efficient. So this isn't undermining local currencies. What I tell people is it'll be a cold day in hell before you walk into a coffee shop in, Nairobi and you're paying for your latte with USDT or stablecoins, right?
Yeah.
That's just not the use case that I subscribe to.
And just real quick, I mean, part of the use case, at least with the yellow card and the way you brokered things over there, was the idea that there were a lot of businesses, like legitimate business, large businesses, that were having trouble transacting, doing business. We've talked a lot on the show about major corporations that have moved out of certain African nations because they couldn't get their hands on the dollars to actually make the trend to buy and sell what they needed here. So that filled a role. But you still have a lot of countries in Africa that either have explicit bans on anything crypto related, and others that maybe not an explicit ban, but certainly implicit.
Yeah, so I mean, look, you're 100% correct, right? You've had, companies like Johnson & Johnson that have had to leave certain African countries because of issues with access to the dollar. And I don't think I need to explain to anybody why Johnson & Johnson leaving, the market is bad for everybody involved. What I would say though, in terms of the regulation, so you only have 4 countries on the continent that have actually banned crypto, and that's all North African countries. So that's Algeria, Morocco, Tunisia, and Egypt. Outside of that, you have, especially in sub-Saharan Africa, you have, what has been, overall a very friendly move, especially over the past 2.5 years, in favor of the space. I think they've seen, these countries have seen the benefits that this space has brought in the US and in other developed markets. And, look, they want those benefits to be homegrown. And also they see the adoption, right? I mean, you're talking about, Nigeria is #1 for stablecoin adoption, right? And that's a Visa stat, right? So, I mean, you're seeing this adoption, across the board. And what I like to tell people is before November, Africa was the best place to run a company in crypto in terms of the regulatory openness.
All right, and still is, I take it?
Well, look, it's changed a lot in the US.